Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about SoFi Technology's SoFi stock and Palantir Technology's PLTR stock. We're going to start off talking about SoFi Technologies and how this particular author believes the SoFi stock price could fall in price and that right now is a good time to sell this company, and I will be adding my rebuttal to this as we go on and analyze his particular very negative bearish article. After that, we're going to move on and we're going to talk about Palantir Technologies, particularly about how one of Palantir's investments have gone bankrupt. And then from then on, we're going to determine where the long-term price target for Palantir is and if this particular forecast could be met regarding their future stock price prediction. So if you want more updates on Palantir or SoFi, remember to go and smash that like button right now, comment your thoughts down below, subscribe if you are new, and without further ado, let's jump into today's stories. Right now, the SoFi stock price trades for $5.95, while professionals believe this company should be trading between the range of $6 and $11. Last week, if you've been paying attention to the stock price action of this stock, you can see that the SoFi share price has moved higher, and it has surged by around 19.5%. A lot of this has to do with the overall market rallying based off of very good news regarding inflation data. So clearly, if inflation data comes in good, the overall stock market's going to rally, and that would include SoFi Technologies. However, the author believes that this particular full-on rally has nothing to do or very little to do with SoFi Technologies themselves, and this is not a time to buy this company, according to him, because he says that the fintech could fall further and it hasn't turned a corner yet. Now, I would somewhat disagree with him. I would say that the current company trades at a pretty good share price, but I do want to say that there is one particular price that you would want your average cost basis for this company at, and clearly the lower the better, but in this article I will agree with him on that point when we go to it. But as of right now, I think SoFi Technologies is a pretty good bet right now to buy it if you plan to hold it for the long term, so I would disagree with him about him saying that you should sell the company. The SoFi stock price rose with other speculative growth stocks because we got really good news from CPI data, which is the Consumer Price Index, which is showing signs of slowing inflation. And another catalyst for this company is that the student loan repayment moratorium is set to expire on December 31st, so if inflation is lessening and we are approaching a catalyst of the student loan moratorium, we could see the SoFi stock price surge even more than 19.5%, which it's done recently. So despite the recent sharp upward shift in the stock price, this particular author is still bearish on this overall company and he wants to sell the company, and he highlights two main reasons for this. He says that the CPI data only came in positive one time. This isn't to say that the inflation is actually getting under control yet, and it's not enough to pivot the Fed's overall very hawkish stance on increasing interest rates. So right now, because we don't know, he's saying to sell the stock, but I would say that this isn't an opportunity to sell the stock. If anything, you would just hold this company, because if it's a fundamentally good company, and if you're not overexposed to this company more than 5%, there's no reason why you wouldn't hold on to this company, particularly in regards to their long-term price appreciation and ability and forecasts to increase their stock price. So I would disagree with him on that. The second reason he gives is he believes that the student loan moratorium ending has already been priced into SoFi's stock price, mainly because management has already taken that assumption into consideration when forecasting their overall earnings and revenue. So he says that that's already been taken into consideration, and as of right now, it's not going to move the stock price. He also properly identifies that if the macroeconomic environment doesn't change and it continues to be very negative, the shares of SoFi can go lower, and I agree with him on that. He says that one of the lowest prices that it could reach is around $3.34, which is their tangible book value. And let me tell you, if the stock price reaches $3.34, two things will happen. The first thing that's going to happen is I'm going to buy a load more shares, because right now I have around a 4% allocation for my portfolio, but if the stock price drops to $3.34, that's going to lower my overall allocation to this company to around 2 to 3%, and then I'm going to use the remaining percentages to get me up to 5% to buy this company, because if it drops to or below $3.34, which is their tangible book value, I'm going to load the boat. But he believes the company will fall to that particular price. The next thing that's going to happen if the stock price falls to that particular particular target would be that management, I think, will implement a reverse stock split to where one share would be worth around $33.40. But overall, I would say that would be good news because it allows us to buy this company at even a cheaper price point. Now, will it go that low? I'm not sure. We're going to have to see if the current macroeconomic continues to be negative. But if we get positive CPI data and that inflation is becoming under control by the Fed, that would be a very good news for not only SoFi, but the overall stock market. Next, we're going to move on and talk about Palantir Technologies and their PLTR stock. Palantir Technologies is known for investing into very speculative companies through various deals or their Foundry for Builders program. Right now, the PLTR share price is $8.41, while analysts believe this company should be worth between $5 and $15. Many people, depending on who you ask, would say that the current stock price is overvalued, but other professionals would say that it could be undervalued because it's not trading at its intrinsic value. But for this story, we're going to focus on their investment in Fast Radius, ticker symbol FSRD, which went public back in February via a SPAC merger. Palantir, as a part of a deal, invested around $20 million into this company, buying 2 million shares at $10 each. But recently, the company is going bankrupt, which doesn't reflect very positively on Palantir. Even though the PLTR share price is up 2.96%, the FSRD price has fallen around 47.79%, as their announcement of them going bankrupt is still taking effect in the overall stock market. But what does this say about Palantir's long-term investment thesis? Well, I'm glad you asked, because over the long term, this company still could be a shining star if you get it at a good average price. And to me, a good average price would be around or below $6 per share. The overall investment landscape has pressured Palantir's stock price to go lower and lower because as interest rates increase to get inflation under control, many investors are liquidating their risky growth companies, which would include Palantir Technologies. Palantir is not the only technology company that has been struggling. Literally, the entire NASDAQ essentially has been struggling, which is very technology heavy, and many other speculative technology growth stocks are also falling due to the macroeconomic environment. But for investors who believe in the long-term potential of this company, they may think that it's relatively cheap right now because it's trading at almost its cheapest that it's ever traded at, or at least in the range. According to these investors, anything below $10 would be a good average cost basis to have for this company. Now, I personally think in the short term, the PLTR shares will drop further in price due to macroeconomic pressure, but over the long term, I do think this company could be a good holding opportunity if you have an average cost basis of around $6. And here is why I think that. Palantir's management believes that it's well positioned to continuously transition more to a commercial data and analytics company rather than a government data and analytics company. And I've said this so many times over the last 2 years that Palantir's main bread and butter will become the commercial space and their commercial segment. So this means that Palantir is going to start pulling away more from government revenue and more toward commercial revenue sources. Now, I'd also want to point out that the growth hasn't been spectacular overseas in Europe. I think the company could do a lot better trying to infiltrate the European market because right now they are extremely reliant on the United States market. But regardless, Palantir predicts that its overall data platform will be and can be used across all industries, giving them a total addressable market of around $119 billion. Now, this doesn't mean that Palantir will be able to gain this entire market of $119 billion, so I'm not saying that their market cap could be $119 million. I'm saying Palantir will gain itself a slice of that $119 billion industry, which is rapidly growing. Additionally, I'd like to point out that this bear market and negative macroeconomic environment that we are in right now will not last forever. It could last for the next year, the next 2 years, the next 5 years, or even the next decade, which I highly doubt. However, eventually it will end, and companies like Palantir or other companies that have solid fundamentals will rise above the water as long as you have a cost basis that is somewhat realistic, preferably below $10 and ideally around $6. However, in the long run, this company still looks like it's going to do well. It's growing their overall revenues pretty consistently, and I'm excited to see what Palantir can do in the future. So with that being said, I'd love to hear your thoughts down below. Remember to go and smash that like button for more videos like this one. Subscribe if you are new, and I will see you in the next YT video.